Thanks very much for joining us. This is a session that we're looking at the European living investment side. Fascinating panel here, lots of different expertise, so really interested to get your views. Thanks to everybody for joining us here in the room. It's part of the program that we're running live at EXPO Real, and thank you to everybody who's joining us online. Let's kick off with introductions. I'll start briefly with me. So my name's Richard Betts. I'm a co-founder and publisher at Real Asset Media. We're really focusing on, I guess, the kind of things that are driving the market, so market intelligence, research, analysis, insight. So very interested to pick up on your views, particularly on the sector, which has been one of the biggest in terms of investor intentions. So interesting to challenge what's happening at the moment and where we are. But let's start with introductions. Let's start with you, Mark, and we'll work our way down the panel. So over to you, Mark.
Sure, thank you. So I'm Mark Kuijpers. I'm Senior Managing Director at Greystar, overseeing our businesses in the Netherlands, Germany and Austria. And I've been with the company for 8 years now.
Super, thanks very much. Lisa, over to you.
Yeah, nice meeting you. I'm Lisa. I work for Heimstaden. I'm heading the investment team for Germany since August, and yeah, I'm looking forward to the conversation here.
Great, Hideki.
Hi, my name is Hideki Kurata, and I run Schroders Capital Real Estate for France, but I also run Schroders Capital Living Strategies across Europe.
Great, Friedrich.
Yeah, welcome. My name is Friedrich Warmbold. I'm Head of Investment Management Residential at Union Investment, and I'm overseeing our pan-European investment strategies outside of the DACH region. So I'm focused on all countries outside of Germany and Austria.
Great. Let's pick up, maybe Hideki with you first of all. Just in terms of where we were last year and where we are today, I guess, what are you seeing? What are the differences? Where's the momentum?
I think that the biggest difference was probably between last year and 2021. Between the interest rates and inflation, and all of that has had a significant impact on generally real estate, and that has not left the living sector alone. So that's the biggest change I think since 2023. It's a little bit more of the same, except that what we're seeing is more, I think, a stabilization of the horizon. I think that the fact that the inflation is actually more subdued generally means that there's more visibility as to how rates are also going to evolve over the coming future, and so there's more stability than 12 months ago. That's for sure. So there's more predictability. If there's one word that I need to keep, it would be more predictability, more stability.
Okay, so good stability in the market. Mark, what are you seeing? I mean, it'd be interesting to get your changes. Have you got the same view there, or are there different things that you're seeing? Have you shifted or altered strategy in any way over the last 12 months?
Well, I think we come a bit from a period where I think the general industry was more of a sort of a wait and see approach. It still is a bit, although we see activity picking up a bit. Despite that, we actually have been really active. So we started actually close to 7 projects in the past, let's say 16 months in the Netherlands. So we have at around 4,500 units under construction at current. Germany is slightly lagging behind that, but we also see activity picking up there as well, especially in the last, let's say, 6 months or so. Yeah.
Okay, so more activity, so the momentum beginning to change from that point of view.
Yeah.
Lisa, let's come to you. Changes, but also I'd be interested in, I guess, Heimstaden's view, particularly on Germany, because you're looking after that side of it in Germany. So I suppose, how are they seeing Germany in comparison to the other areas where they're active, and what changes have you seen over the last 12 months?
So at the moment we can really see that the market is in Germany very stabilizing. So you see prices growing again or stabilizing. The underlying fundamentals are very good for residential. I mean, there's a chronic undersupply in the market, and it's forecasted to stay that way. You have rents continuously increasing in the major locations. So for residential, Germany is a very interesting play if you really look at the major locations and the surrounding areas, like the Speckgürtel. So from that view, but you see similar patterns also across the other countries where we're in, like the Nordics and the Netherlands.
Okay, interesting. And Friedrich, let's pick up with you because, interestingly, obviously, Union Investment, German capital, but you're actually looking at the markets outside of Germany. So very interested to get the perspective of that German capital on those markets, what you're seeing there, and whether or not you have changed strategy, whether or not there's different views in terms of those markets.
Well, I can say that we haven't changed our strategy. We are perceived as a core investor and we will stick to that as well. There's a good reason why we have ventured into the European residential markets back in 2019, 2020 and 2021, because we found relative good returns in comparison to the German market. And it was always is our strategy to diversify our commercial real estate funds and to build a residential allocation. And we have done successfully so in Dublin, Amsterdam and in Helsinki. And before now exploring new markets, which we are continuously doing, however, we would want to strengthen our locations. So that's why we are probably not too active both in Southern Europe, but also not in the German-speaking countries, which we are not completely excluding. So we do agree with your views as well that there is a potential momentum, but again, we would want to strengthen our core investments in the European markets first.
Okay, good. Hideki, let's start maybe just with a broader picture in terms of the trends. What are we seeing? I mean, you there mentioned, Lisa, in terms of opportunity there. But what are the trends? What are they driving, I suppose, this sector? And does that mean that we're really looking more at PRS? Does it mean there's opportunities in student, senior living? What's your sense of the trends and them driving this sector?
I think that when you're thinking about living sectors, you have to think about it, and including generally real estate asset classes, you have to think long term. You have to think global trends, right? And the way we think about real estate at Schroders is first and foremost operational real estate. How do we create value through operating the real estate, whether it's a residential asset or a commercial asset? And the way we're thinking and articulating those global trends is around what we call the 3Ds. So it's digitization, it's decarbonization, and the last one is demographics. And when you think about living strategies generally, they actually fit in each of those categories, one of the needs. So you have more operational real estate when you think about, for example, student housing with the digitization of the applications that the student use when as a tenant. When you think about decarbonization, all of the new build and the refurbs essentially have to be decarbonizing the existing stock or the future stock, so positioning it for growth for the future. And when you think about the last D, which I'm forgetting and you're going to help me, is decarbonization and demographics. Obviously, the change in demographics changes how people live. The number of rooms in residential is changing. The size and the type of services that the younger population wants and needs, and the size and the type of residential that the senior population needs as well. So this is how the global trends to us have an impact on how we think our strategies.
Interesting. And Mark, let's pick that up with you just in terms of some of those trends, I guess. How much are they driving your business? I mean, the interest in the areas around sustainability, which has come through in a lot of the discussions that we've had. But just pick up some of those trends, and if you're also seeing different ones for your business.
Yeah, well, I actually agree with the 3D sort of view that Hideki just gave. What we also see as sort of very important trends is affordability, together with sustainability. And the affordability, if you look at like the last 10 years, affordability was less of an issue because let's say interest rates were fairly low, provision rates were fairly high, construction costs were going up but not super high yet. And those have now sort of gone a bit against, let's say, specifically the one-person household. So you see interest rates come up, they will gradually come down, but not to the levels that we were used to in the past 10 years. Construction cost stabilizing might come down a bit, but if you look at the buildup of construction cost, wages won't come down, materials won't come down, and you generally see the push of all the governments to squeeze up quality. So that also drives your construction cost up, which actually puts specifically the one-person households under a lot of affordability pressure, because they're essentially competing with a one-income household in a market where actually the prices, whether it's for sale prices or rents, are actually set by two-person households. So the only way actually to provide affordable housing for that one-person households is by rethinking what living is for those one-person households. And I think the general trend in the past years, because affordability wasn't really an issue, is that we tend to build bigger, and now we actually need to start building smaller again, because that's the only way that you can actually reduce cost. And I think that can be done, especially for the one-person households. It is really possible to actually create very good floor plans on like 45, maybe 50 square meters, still provide a lot of quality, especially if you provide amenities as sort of an extension of that private apartment, if you like. Also driven by the pandemic, for instance. So living has changed in the sense that your home is not only the place where you eat and sleep, but it's also the place where you work. So providing like very cool co-working space to the apartment as an extension really adds quality, but you can still reduce the size of the apartment because you give back that sort of space extension by the amenities.
And I guess this means you've really got to be building at scale in some ways to be able to provide that for enough people. And interestingly, so you also mentioned this kind of micro-living area as one of the kind of trends. So do you see that as well, that to meet some of those affordability criteria, and I'm not necessarily talking about affordable housing funds in that sense, but to meet the affordability, that therefore we are going to be looking at smaller units, a different way of looking at the living?
Yeah, for sure. I mean, you're looking at more efficient floor plans for sure. You are looking at areas which are in reach of 30 to 60 minutes to key centers. So those areas are really benefiting due to more home office as well. I mean, whole Berlin surrounding is benefiting. All the eastern bigger cities are benefiting from it. And yeah, for sure, flat sizes, yeah, they are decreasing, but still you have to address the issue that due to home office you also need the separate space and so on, so you really need to fit it all into one basket.
Are we talking mainly about, for micro-living, are we talking about furnished, unfurnished? What sort of amenities are we having to put in?
I mean, we are not really looking at micro-living. So what we are doing is really looking at affordable living, build to rent, maybe with the new Heimstaden, with the new Heim fund. But our existing portfolio is really affordable living. So that's really the bread and butter what we do. Yeah.
Okay, good. And Friedrich, it'd be interesting to get your views on this in terms of, that provision of mid-rent affordability. How do you see that? Is that the market where you see the most opportunity and I suppose the most demand?
Well, I guess the demand is driven by people's income. Yeah. So, of course, not everyone is in the top 1% earners, which is also why we have, as Union, kind of excluded the luxury segment from our strategy. We are focusing on mid to higher income classes in different markets. Also because we want to diversify our portfolio and to make the portfolio greener, so to acquire new projects. And let's be honest, you struggle to make numbers work, to stack up with investor returns, but also with development calculations if you are not, say, targeting, say, mid-rent or higher rental segment groups. Yeah? Where do I see opportunity? again, it depends on the market. So we are heavily invested, and actually most of our investments in Amsterdam are regulated. And generally speaking, we as a German fund are fairly good with it, as long as we've got the certainty that it won't change again. So that was a bit of a tricky situation over the last 2 years. But we wouldn't underwrite massive rental growth anyways, because we are concerned about people still being able to afford their home in 10 years' time. Looking at other markets, for example, the UK still is very appealing to us as well, despite, say, currency and hedging issues. But there we are speaking solely about the free market segment. And I do believe, likewise, the Nordics, specifically Denmark, but also Helsinki or the HMA area, will provide opportunity within the next 24 months for sure.
Okay, good. I just wanted to drill down a little bit, Hideki, because I know that you're operating also outside of Europe. So are there any things that I guess you're doing differently there, or things that you've learned and shared that knowledge across what you're doing here in Europe as well?
I think when you think about the demographic shifts, for example, they're the same all over the world in terms of aging population. When we're thinking about the Western world, they're definitely aging population, and this applies to Japan, for example, where we've invested in co-living, in Tokyo. And I think that the reasons why you have those different products in different regions may be different, but the trends are similar. I think that if you think about other countries where you have an issue of not only affordability but availability of space in order to house, then you have to address it in a different way as well. But I think our point is that you will have those global trends that will affect populations across the world. And I agree that affordability will have a different size of an A depending on where you look. You will have large cities where the A can only be a small A. It just needs to be affordable to the people living here. In other areas, it's going to have to be a big A, where it has to be somehow subsidized one way, with one way, shape, or form of subsidy.
Okay, good. I wanted to pick up just briefly on the regulatory side, because Friedrich, you were saying that actually that was something that provided stability in a way, so long as you knew what it was. Is that the same also for the other investors on the panel, that you see regulation, consistency, kind of as a positive thing, so long as you know what it is, you can work within it? What's your take on that? Maybe starting with you, Mark.
Yeah, so we're not necessarily against regulation, as long as it is predictable in the longer term, and as long as your rent growth is at least linked to inflation, maybe with a small markup. Then it actually, and I totally agree with Friedrich, that it actually gives a very stable, predictable investment.
Okay, good. And Lisa, just from your side, obviously you're looking at Germany, so how do you see that regulatory side? What's your take on that? Do you see it as a challenge? Do you see it as something that provides a reliable structure?
I mean, it's something which is there, and it has its purpose. I mean, as long as there's predictability and we don't see it going away anytime soon, it gives you a framework you can absolutely play with, and it gives you it gives you those boundaries, but still there's different areas where those levels apply. For example, if you have a tenant moving out and you refurbish the flat, if you apply 1/3 of new build costs, you're able to get out of those regulations, because you actually add a kind of new build product to the market. But obviously, if you have tenants in the building, then you can do increases via index or whatever you have in place. So it gives you a certain amount of stability, so you know what kind of rental growth to expect. Sure.
And one of the interesting areas, we mentioned a little bit sustainability, but there's been a lot of focus on the social side as well. And of course, living is one of those areas where, if we're looking at affordability, that's where I guess efficiency in terms of heating, in terms of power comes into that. But also, of course, the social side is very much something that touches living much more closely, whether that's BTR or whether it's senior, student. So I guess, how do we see those two things? Let's start out first of all with sustainability, the energy efficiency, the kind of things that you're having to think about now, both I guess in terms of new development but also retrofitting if you're doing that. So how much of a role is that playing, Mark, in the affordability side?
Well, it plays a very big role. First of all, because obviously, if you look at the total cost of living, energy is getting a larger, let's say, component of the total living bill, if you like. If you also see in the Netherlands, specifically, the regulated part of the market for the, let's say, social housing as well as for the mid-rent housing, the rent that you can charge is actually related to points that you get for an apartment, and a very large part of that points is actually driven by the energy efficiency of the apartment. So the better your energy efficiency is, gives the resident a lower energy bill, but in return for that he pays a slightly higher rent, and that's actually good for the landlord because that's an incentive actually to do invest in let's say driving the sustainability of the unit. So I think that's a very fair and balanced system with the right incentives.
And is that kind of consistent across the different markets that you're in, or is it just you have to adjust to different regimes?
You have to adjust. So in Germany you don't have that point system, but in exchange you have like interesting subsidies or interesting loans that you can get if you reach certain sustainability levels. So every country has their own system, but we see generally that there is an emphasis on driving sustainability and providing the right incentives to the landlords to get that done.
Okay, good. And Friedrich, just from your point of view, how do you see that in terms of the sustainability side? There's obviously a big focus at Union on the environmental side. What's your take on that? And also, I guess, do you expect to see more of a focus on the S going forward?
So Union Investment has about a 15-year history in sustainability. We've actually grown a very big team internally, and also for our commercial investments, that is a big focus. And as I said earlier, we wanted to diversify into residential, and consequently we are doing that for new build projects. So the 1.2 billion which we've invested so far were just new build projects, highly energy efficient, taxonomy compliant, which is kind of the regulatory piece once again. So that's the prevailing point in our investment strategy for our residential strategy. I agree with the point on landlord costs, on tenant costs, but also landlord costs, generally speaking, and to make buildings future proven. Of course, being a cooperative or from a cooperative banking network, social is key to us as well, but it's hard to measure. So we are, by providing housing, generally speaking, you could probably, or affordable housing, you could probably tick the box by also make placemaking and giving something to the community that will also be kind of ticking the box for the S. But again, you simply, or at least we struggle a little bit to measure that as clearly as you can do that with the environmental aspects.
Okay, good. Hideki, if you want to pick that up, and Lisa, do.
Yeah, no, I think that the it's interesting that we moved from regulation to environment because both are linked, and I think this is where we can say regulation is a good thing, right? As long as it's predictable, because you have a path, and I think most regulation around the E actually show a path that is long term, and this is, I think, case in point in terms of predictable regulation is positive. At Schroders, after the 3D, I'm going to give you another 3 letters, which is SOS. We do sustainability. We think about sustainability, operating real estate and solutions. And S, the first S, is sustainability for a good reason. It is a top priority, and where I think that when you ask the question, do you have the same approach to the different countries? the answer for us is absolutely. We have the same approach to all the countries, which is the highest standard we think should be there. So we're not waiting for regulation to hit. We're effectively trying to be ahead of regulation in order to anticipate that and to make our investments sustainable in the long term and avoid obsolescence. And again, when we think about ESG processes, we think also about obsolescence and therefore liquidity of our assets in the next 5, 10, 20, 30 years.
Okay, so this is actually de-risking and future-proofing in a way for you.
Yeah, with a big S component, which is social responsibility as well. I think it's not just saving our investors returns, which is super important and is a priority, but also as a socially responsible firm, this is also one of our priorities.
Okay, good. Lisa, what's your take on that? How do Heimstaden see that?
I mean, our focus is for sure strongly on the E component, so we really have targets to hit, and we are really trying to fit out our existing buildings so they are sustainable, they are compliant, anything what we can do. But of course, it's always a measure of how much can you really economically invest into a building, how much can you pump it up, and because you cannot just increase rents for existing buildings, obviously, so you cannot really get the return out of it, so it's always a little dance in between. But it's high on focus, and on the social aspect, I mean, our slogan is creating friendly homes, so we are very much on the social aspect. We have a platform, we have a constant communication with our tenants. They can give us feedback. We do have events for the tenants and so on. So that's really, really, really high up for us. Yeah.
Okay, good. And you mentioned there about existing assets, and of course that's an interesting topic.
Yeah.
Because you can do far more at the moment with new build, I guess, and retrofitting existing assets more difficult. And what about the topics around renovating, I guess, different buildings? So you're changing office to residential or those kinds of things. How much of a challenge is that? How much of a part of the market is it? Is it going to be an increasing market or just too many challenges with that? What's anybody's take on that?
Well, I think it depends a lot on what the local planning system, for instance, allows. For instance, in the Netherlands, we do see quite a bit of office to resi conversions, but there's two sort of challenges with that. Typically, is that the typical office grid does not necessarily allow, let's say, for the most efficient floor plans, and let's say in order to really meet like new build requirements in terms of energy efficiency, you almost need to strip the office building to the concrete load-bearing structure. So that's the only piece that you can actually reuse. But for instance, our colleagues in Paris, they are actually heavily focused on office to resi conversion. But that's because there's quite a lot of emphasis from the municipality of Paris actually to take out office from the market, because there's quite a bit of oversupply there, and to convert that into residential, and that can fairly easily be done under the planning system that is there.
Okay, so that's actively encouraging.
Yeah.
Okay, interesting. Does anybody else have a take on that in terms of either retrofitting, renovation? I mean, interesting as well, Friedrich, just to pick up the point around technology supporting what's happening in terms of tenants as well, because obviously there's a lot more of those kind of community apps, much more data coming through, a big focus on innovation more broadly across the industry. Is that something that's also, I guess, driving things from your side at Union?
Within the operations, for sure. So to give you an example, in one of our Irish assets, we've installed about 8 different systems, apps, however you would want to call it. So some are for the tenants, to do polls, to pick up the parcels, to get a car. Some are for the landlord to get to monitor the energy efficiency of the buildings. So that is definitely playing a key role, technology as such, and it will also increase the efficiency of management for sure. and therefore, if you're building a new residential, say, or build-to-rent block as part of our strategy, you will have to think about the operations as well and have to implement the newest technology also to future-proof your asset. So, and it doesn't stop with like a customer app for the landlord, for the tenant, and for the landlord. You're talking about technologies such as Wi-Fi stations, EV charging panels, and so on and so forth. So it's definitely a key consideration.
Okay, good. I want to drill down a bit more into some of the opportunities, what you're seeing in the market, where those opportunities are, particularly looking towards the next 12 months into 2025 and beyond. I suppose it would be interesting to pick up in the sectors where you're active. I suppose, what is driving your strategy there? Where do you specifically see the opportunities? Is that focused around particular geographies, particular types, whether that's age-related, whether it is that more, mid-scale? So I guess, Mark, let's start with you. Geographies that are attractive, sector types that are attractive, where are you when you're looking at the opportunity side?
So at current we actually really like Germany, given let's say the repricing that has been going on in the last, let's say, 12 to 16 months. So we see really good opportunity in Germany to essentially provide any kind of residential modern product, if you like, whether that be student or let's say urban living. So again, the somewhat more compact apartments, let's say tailored towards 1 and 2 person households in good public transportation hubs. In the Netherlands, the story is a bit of the same. So there's a severe undersupply for student product, actually accelerated at current because the Dutch government has recently introduced sort of a taxation of private individuals that have like a 6-unit apartment that they rent out to students. They get heavily taxed now for that. So a lot of those private individuals are essentially vacating the buildings and selling them off to private owners. But that means that there's even more demand from students coming online, which means that there's actually more need for PBSA to be supplied into the market. So we see PBSA as one of the strong pillars for our Dutch strategy, but also the mid-rent product that is severely needed in any of the Randstad cities, as well as even cities outside of the Randstad area.
Okay, interesting. And we'll be getting some research from Bonnard, new research, in about 10 minutes, I guess, and around that time. So it'll be interesting to see, because I'm sure that will be picked up as well, that drive in demand for student.
Yep.
Lisa, I guess, what are you seeing in terms of Germany? Is it across Germany? Is it the big 7 cities? Is it across the smaller cities? Where are you seeing the demand and the opportunities from your side?
I mean, we are really now looking into development opportunities because as we know, the fundamentals are really supporting that, the undersupply of really build to rent in the major cities and the surrounding areas. So we are looking into that, finding good areas to develop in, and then really have a good size build to rent asset there, which we can do maybe together with the developer. I think there's really a good timing at the moment to look at that, because first, of course, the fundamentals, and then on the other hand, there's interesting product out there which needs capital in order to realize it.
And just in terms of an understanding, in terms of other sectors related to living, like student, like senior, if we take senior without the healthcare aspect, let's say, are those areas where Heimstaden would look in terms of Germany? Is it too early? How do you see those trends?
I mean, we wouldn't exclude it. It's not our core strategy, but we've been actually looking at a few projects because the good side of it is you are able to achieve much better rents, obviously, and you are also matching a need in the market for example, senior living or student living. There's a huge need in the bigger cities for sure. We could imagine doing that as part of a development. So it shouldn't be the majority. If it's like, I don't know, 10% of the development, we could potentially also do that. I wouldn't exclude it, but our focus is really on affordable rent and yeah, exactly.
Okay, good. Friedrich, let's pick that up with you as well, because you're obviously looking across the different markets. So interested to get your perspectives on how those are performing and where you're seeing, I suppose, the biggest flow of opportunity at the moment.
I don't know whether you can speak of a flow of opportunities currently. I would love to see a flow, but being honest, it's still a very subdued market. Specifically, if you would want to invest into new build qualities or developments, let's be honest, in some markets it's more or less not existent. Which is also providing a bit of a challenge for us in terms of underwriting transactions. So we cannot draw, and our advisors cannot really draw on real-time data or real-life data, but it's more like a guess in your operating costs. So having said that, of course, our focus continues to be in the markets where we are most active already. So the Netherlands, again, with the stabilized regulation, that is something which now works for us. The Nordics, being a very mature market, for example, and underwriting deals and having suffered a lot, so the yields have moved out quite drastically. You may question whether there is a tipping point at just around the corner. I do see the Nordics to be very interesting, so specifically Denmark, but also Finland as well, and UK, of course. UK, the issue for us is a little bit as a euro-denominated investor, the hedging costs, so financing will need to be accretive, so that we are not yet there, but we are closely monitoring the market. And then in terms of different strategies, so micro living or student, we may expand our German vehicle at some point, but it's a little bit too early to raise new capital, because it's not because there are no opportunities, but because the pricing yet does not match our return requirements, okay, in all honesty. So I guess there will need to be somehow a little bit of an alignment between the sellers and the vendors.
And Hideki, from your point of view, from Schroders' side, I guess, where are you seeing that? You know, the SOS and the 3Ds. Where's that driving you to invest?
I think that the way we look at it is, you know, through our local presence, you know, with 16 offices across the continent, we have a very local approach to each of those submarkets. You know, clearly Germany, with its 7 major cities, is something that, as we were discussing, you know, has a significant discrepancy between the supply and the demand for all of the living asset classes. I think that, you know, clearly the lack of you know, modern and future-proofed assets is one that provides you know, opportunity for investing. I think that the second region that we have is Nordics, from a priority standpoint as well. You know, PBSA and residential, especially in the same order. You know, Denmark being on top of the list with Finland and Sweden next is really attractive to us. I'd like to point out UK, where we launched an impact fund, which is, you know, focused on regeneration of city centers. So that's very much in line with the national policies over there. And this is a big focus for us in the future. And finally, I think France has also its points of interest from a PBSA or co-living side of things. So now you'll say, yeah, but you've just listed the whole of European countries, therefore you don't have priorities. But you will have noted that it's in different subsegments. And I think that the challenge that every investor has to face is, it sounds like it's simple to say Europe living. In reality, you're multiplying the subsegments of living by the number of countries, and that gives you the number of subsegments you need to focus on. And this is the complexity of choosing your target markets.
Okay, and final question from me. If I quietly came up to you after this and said, where should I invest my money? You've only got one. I can't invest broadly across the whole of Europe. So what should I be doing and when? What would it be? You don't need to answer that if you don't want to, but I'm going to make you answer it, Mark. But you can answer it if you wish to. So out of all of those, if you were advising me quietly, what should I do?
I would tip you for Berlin.
For Berlin?
Yeah.
I like Berlin. So that could be good. Any other tips from anybody?
I mean, for sure you can buy good existing buildings now under replacement cost in Berlin, and I think there's a lot of potential.
2 for Berlin so far.
I would probably go for Amsterdam or the Randstad area.
That was my second.
Good, Hideki. One only.
Sure. Choose a Schroder fund. You'll get the exposure.
Very good. And what a suitable way to end. That's excellent. Really interested to get your views both on the trends, but also what we're seeing across Europe and as well how some of those global trends are impacting it, and where some of the opportunities are, particularly in this living space. Thanks to everybody for joining us. The next session is going to be in around 10 minutes, which is looking at student housing. So feel free to grab a drink from the bar and come back again, or indeed stay where you are, whichever you want to do. Thanks very much to all of the speakers. Thanks to everybody for watching this online. If you've been watching it on demand, thanks very much for watching.